Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here once again with another episode of understanding and decoding the domestic as well as global factors and breaking down into several currency pairs. So first talking about the domestic side, it's quite important to understand what's happening with the flows because if we talk about the flows for this month, this has been the lowest monthly flows since March 2020. So the flows are around to the tune of negative 68,000 crores, and in March 2020 we had seen this number at around negative 65,000 crores. So there has been severe outflows from the equities that has been seen, while outflows have been not that much, maybe to the tune of 3,000 crores for this month. Overall, still for the year, the debt and equity flows continue to be positive, but then this really hampers because 1 month flows are huge, which are taken off from the Indian markets. On the contrary, if we talk about the FX reserves, we are still above the 700 billion dollar mark, but obviously below the all-time highs of 704. Reason being the FCAs, which is the foreign currency assets, which have been declined by almost around $3 billion, mainly due to it happens due to the appreciation or depreciation of non-US currencies. So euro dollar has dropped sharply from almost near 1.13 levels, moving towards 1.0850 levels, where other currency pairs where the revaluation is also done, and thus at this juncture we had around $701 billion of FX reserves. While also, if we talk about the intervention part where RBI has been a bit active, we are seeing somewhere around 8407 half remaining as a very near term resistance zone, somewhere getting protected. While also, if we talk about the trade deficit numbers, they have come to a 5 month low to the tune of $20.8 billion. So that's more from the domestic perspective to understand. Also, if we talk about the IPO flows, which are expected, there still remains some lull on the day three subscription. So of the major IPO flows. Thus, if we see the same impact on the forward premiums initially, were overpaid. That's what we believe, and now because the response has not been that great in terms of the comparison of anticipation for the IPO flows, it has started to reverse in terms of the forward premium, particularly for dollar rupee. On the global perspective, if we talk about the Fed speakers, they have been not that hawkish. They have been sounding a bit cautious with respect to aggressive rate cuts. They are in for rate cuts, but maybe quarter basis each in the next two policies for this year is what the anticipation is, and this is what we also personally anticipate. While on the European Central Bank, we believe there will be a 25 basis rate cut on cards, considering the inflation is cooling off. And the same goes with UK as well, because their inflation has come around the expected trajectory of around the 2% level. So GBP dollar, that is why has also cooled off from almost near 1.34 to near 1.30, sub 1.30 levels. We anticipate a rate cut from the UK front as well. That's a personal opinion again. On the dollar JPY pair, we have seen a spike because dollar itself has rallied. If we talk about dollar index, it has rallied from the lows of 100.20 to near now 104 levels. It is approaching 104.42 acts as an immediate resistance at this point in time. While this rally could cool off if we see levels going below 102.60 now, purely on the dollar index front. 10-year US Treasury yields have rallied above 4. We feel that it may come sub 4 once again. We have seen levels going to 4.12. It has cooled off towards 4.04 odd levels, and we see once again it may drop. Once we see the rate cut cycle coming into picture. Overall, if we talk about a dollar rupee pair, the anticipation remains that 83.90 remains an immediate support point. While 84 big figure, it's been hovering around those levels, not finding a direction at this point in time. But certain data points, particularly from the US, as well as how the rate trajectory pans and any kind of geopolitical escalations can find one-way direction as well. So, on the contrary, if we talk about the resistance point for the dollar rupee pair, again, the NDF highs of 84.15 has still not been tested. We have seen highs on the onshore to the tune of 84.12, but then it moved off towards the big figure 84 again. So broadly, 83.90 acts as a support, while 84.15.20 zone acts as an important resistance to watch out. Either of the breaks can define the new direction or levels. So that's all from my side, friends. Thank you so much for your time, and wish you all the best and all having a good trading session ahead. Thank you so much.